So we know that Amazon has been making some pretty big investments in the business, particularly on this one-day shipping front. So the company is putting a lot of money towards allowing one-day shipping in the U.S. It decided that cost will be about $1.5 billion now. So that's one of the things weighing on the bottom line here. You can see EPS was $4.23, significantly below that estimate of $4.62. Revenues, though, did beat, and they still are growing 24% year on year. This other key number that's factoring into that share price decline this morning is, of course, we talk about it a lot, AWS, Amazon's cloud business. So AWS revenues were $9 billion, also below the estimate. But if you look at kind of the breakdown of that growth, AWS has been powering this company's operating margins because it's such a low margin business. It's software, it's cloud. So AWS grew 35% year on year. That's lower than it has been in the previous quarters. It had been as high as like 80–90% a couple years ago. We did see strong growth in some of the other key segments like subscription services. Those were up 34%. Third-party sellers also increased 27%. And online stores, the bulk of Amazon's revenue still, so its core online sales business grew 21%. I will also just add that digital ad business also continuing to grow strongly. So overall, kind of the numbers for the quarter were strong, but the guidance was a bit weak, and these investments seeming to show up, that looks to be making investors a bit nervous this morning.
The guidance, I think, was particularly surprising because now the read across from this is, well, just how robust is the US consumer coming into the holiday season? Because it's almost as though this is the last engine that is still motoring along, powering the global economy at this point. And if the US consumer is beginning to tighten their spending, then we do need to get nervous about other areas of retailing.
Absolutely. And I think the key reason that Amazon is making such big investments in things like one-day shipping is to continue to lure that consumer in. There were some signs that these investments are paying off. A note, for example, from RBC this morning saying that strong growth in online sales in the online stores is because of the one-day shipping in the North America market.
I went on Amazon, the pay channel, obviously. I have all of them, so I couldn't get, well, my wife has all of them. I don't actually watch much telly, apart from CNBC, of course. And I noticed there's not a lot on there. I'm kind of like a bit disappointed. And I was like to my wife, well, if we're going to cut one, do we cut this? She's going, well, we can't do that because of my Prime, right. You know, because of our deliveries.
Well, so, that's what they've got going.
And so I'm kind of like, I'm thinking, content. Are they investing as much in content as some of the rivals who are really stepping it up now?
They are not investing as much as their biggest rival, which at this point still would remain Netflix.
Wow.
Netflix above $10 billion so far this year. It was interesting in this release, they really highlighted some of the success that they've had with that original content. You know, they said they got 15 Emmy Awards for this, particularly this show Fleabag, which is based on
which is
a British actor.
Fleabag?
Yes, they get credit.
I didn't know that. Because I mean, it's Phoebe Waller-Bridge, isn't she? Who's,
yeah.
I mean, apart from being young, talented, incredibly rich, I mean, what's she got going for her?
Well, she's won some Emmys, so that's something.
Do you know she's co-writing the new James Bond?
I did not know that.
Yes, she is. They brought her in to add kind of a bit of a quirky angle to the script of the new James Bond.
She wrote Killing Eve as well, didn't she, the first series.
She's got nothing going for her. She's incredibly...
Oh, to be so talented.
Young, talented, rich.
No, but that, you know, they certainly are emphasizing that the original content as a key part of their kind of strategy to keep people on Prime. You know, we saw strong numbers from Netflix. The point that Netflix made is that so far the competition in this space, so from people like Amazon or Apple, it's all good. They say this is all just part of the ecosystem as people cut their cords from cable. So it's more a threat. The cable companies remain the biggest threat than some of those other competition players. At least that's the narrative coming out of these.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.